Hi, welcome to this video day, which is on the 10th of June. It's Monday, and we're just going to look at a couple of Forex pairs today, which are going to be NZD CAD and AUD CAD. We're going to the charts at the moment, and we're looking at these pairs in relation to two common problems that traders have in terms of getting into big trends and also holding them and making decent profits from them. And the two reasons why are basically they're too focused on pips. They're not thinking about the percentages behind the pips. Now we talk about pips, so we're always focused on the percentages as well. I'll explain this in more detail when we go to the charts. Also, if you have no basic knowledge of the fundamentals, then you're never going to hold a big trend with confidence. You don't have the buying or selling power behind the chart. Now, a lot of traders are intimidated by the fundamentals. I'm just going to go through a simple 4-point checklist, which if all the points favour one currency over another, there's a chance of a big trend. Okay. Now, the reason I'm doing it in relation to the two pairs, NZD CAD and AUD CAD, is because we did this in a video a little while back with the checklist, and we said that we felt that the CAD would push the AUD and the NZD significantly lower. Now, the CAD has pushed them down, but it's going to push the AUD and NZD even further down, a long way down. Now, the fundamentals behind the chart are kind of juggernaut fundamentals or supertanker fundamentals, someone called them, which means they're not going to turn around anytime soon. Now, the big fundamentals do generate the big trends. Yeah, the technicals are more important in the short term. You do get sentiment spikes and so forth, but the big fundamentals behind the chart, you can stay out the way of the sentiment spikes. Now, in terms of our videos, we talk a lot about holding for bigger moves. We will never normally go for a move that's less than 200 pips in terms of our reward. And the reason why is because markets are so noisy. You've got to use a stop of at least 100 pips. And if you don't, you're just going to get chopped out by the noise. You're going to lose. Most Forex traders are going to win probably half their trades, lose half their trades. So it's very important you go for the bigger long-term moves. So what we're going to do is discuss these points in more detail. I'm going to go and look at the trade setups, but please do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 major Forex pairs, and get live access to our member center on the link beneath this video. The charts now, we're going to take a look at them. We'll do NZD CAD first. All right, we're on NZD CAD daily. Now, in terms of the checklist we used in our last video, it's just very simple. It's looking at the really, really big fundamentals. Now, point number one, interest rates. You want to look at which country has got the better interest rates and what's going to happen going forward. Interest rates are so important today in terms of trading Forex pairs. Now, I'll come back to this confirmed candle in a moment, but basically interest rates favour Canada now and going forward. What about domestic economies' health? Well, basically Canada is clear from the data doing way better than Australia, and it's going to keep doing better than Australia. Why? Because of the trading partners. Indeed, it's a very good idea to look at the trading partners, okay? Because Canada is so exposed to the US. The US economy is doing relatively well, okay? And there's talk in the media it's slowing up and all the rest of it, but it's not slowing up as much as China, which is New Zealand's main trading partner, which has got terrible problems. So, the first 3 points clearly in favour of the CAD. Then you've got to look at the personality and geopolitical situation. Is there anything geopolitical that can come in terms of the AUD, the NZD or the CAD? No real geopolitical problems in either country. Personality, you can look at risk v safe currencies, which we've done numerous times in our videos, and all three commodity currencies are risk currencies. They don't do well when the global economy is doing badly, and the global economy is slowing up hard at the moment. but of the three currencies, the Canadian dollar is seen as the safer one. Okay, so in terms of our way of getting into this trade, it was this candle here. Yeah, you wanted to, a candle that's going to bring you in, or an event that's going to bring you in. And the event that we noted was the New Zealand Central Bank said they were thinking about cutting rates. So we can come in, we came in at 91.50. Then we look for this 20-day moving average to give way. If we're very bearish, we always think it's going to, yeah, if it breaks, it's going to hold rallies. So it does break, holds rallies, nearly get there but can't get through. 3 tests, can't get through, down, and then we eventually got stopped out. Okay, if you trail a stop behind the 20-day, you trail it normally one level back, and sometimes you're going to get caught. We got caught there. Okay, but the checklist still favors the NZD, and this here is a round number and a weekly resistance level. Poke through, can't get through, and we literally just sold off the round number. So basically in at 88.50. We didn't wait for the 20-day moving average to give way, we just thought it would give way. It has given way, and now we're off to the downside. Now, in terms of the potential of this trade, this is when you don't think pips. Okay, we've got a target of 83.50, which is a weekly support level. You can look it up. Okay, with no leverage from the level that we are at now, that's 9%. Okay, on one trade, no leverage. Okay, now in terms of when you're thinking in percentages, a lot of traders can't make 30% in a year. Most. This the target could make it for you one trade. Okay, now the fact you don't have to use any leverage, okay, you use some if you wanted, basically means you're not going to be watching price action too closely. You've got the big fundamentals behind you. You don't have to watch for price action too closely. What you want to do is always go 2 levels back when you place your stop. So that is the first level of resistance in my view, those 4 candle bodies there. Then a round number, pop your stop back at something like 89.50. Okay, so it's made a couple of percent so far, but it could make another 9. It's a great way of trading for traders who are patient and you are prepared to wait. A lot of traders aren't patient enough. Okay, now in terms of this pair, obviously I'm going to look at AUD CAD as well. I like them both. You might ask me which do I like the best. I don't like either the best. So I'm doing my trade on this or my allocation within my account. I've just split it between the two. This one has done better so far, but I didn't know that. So I just did both together. They both come down. I now think the AUD CAD could play catch up on this one, and the profit potential is even bigger. Now what we're going to do is just have a quick look at it, and let's go to the chart. Right, we're on the chart just from our member center actually, because this pair is actually identical really in terms of its backdrop to NZD CAD. It's the checklist is exactly the same. Obviously Australia is exposed to China, just like New Zealand is. It's seen as a more risky currency than the CAD, and the interest rates favour the CAD, both down going forward. So in terms of the way we've been playing, exactly the same as the other pair. When it got up here, we waited basically for some weakness to come off the round number. Did it on this candle here. We get the slice of the 20 down. Stop is behind the 20-day moving average. We get stopped out. You can see it 95.40, 93.80, just 160 pips. But we're poking at this 94 level. At the time, we just felt the rally would fail. So this time we sold through the 20-day moving average. She's off to the downside. So about 100 pips profit, but a lot more profit to come. I've got 80 as my target. Now that's going to take a little while to get there. Okay, it's not going to get there in a week, but That's 13%, no leverage on the trade. Okay, you're thinking in percentages. So if you're 2 to 1 on it, yeah, it's 26%. Okay, now if it does just half that, it'll still be a great profit. And then all you do is trail it down with your stop back behind this 20-day. So you've got one level of resistance there, get back behind second level resistance, see if she keeps going. Now, if you're a sort of person who doesn't spend much time looking at the charts, and you're patient, then you can make a lot of money out of these types of trade. Now, it sounds simple enough, doesn't it? It is pretty simple, actually. A lot of traders won't do it. They want to be in and out the markets all the time. This way of trading is good, but it takes a good degree of patience. What I would say is I have a longer term trend following account, which would have trades like this in, and I'll have a swing trading account for shorter term moves as well. So I'll combine both methods of trading. You can practice with the checklist. It doesn't take that long to master it, or you can find someone who does fundamentals and sentiment behind the charts. Obviously we do, but we're not the only choice. There's plenty of people who do it, and it is a great way to trade. Big fundamentals, simple technicals, focus on long term, focus on percentages. Right, that is the video for today. Thank you very much for watching me as usual. Take care, have a good day.